Former Italian Prime Minister Mario Draghi says European economies are at risk of falling behind the US and China if the EU does not invest 800 billion euros every year. But will all of this be enough to make Europe globally competitive once more? Hello and welcome to Roundtable. I'm Enda Brady. Now, European economies are experiencing slow economic growth as they struggle with inflation, a cost of living crisis and war in Ukraine. While industrial policy and technological innovations are boosting the US and China, could Europe be left behind?
It's one of the powerhouses of the 21st century, but Europe needs radical economic reform or risks falling behind its global competitors. That's according to former Italian Prime Minister Mario Draghi. In his 400-page-plus report, The Future of European Competitiveness, the former president of the European Central Bank is calling for additional investment of 800 billion euros per year, or 5% of the EU's total GDP. That's more than the Marshall Plan of 1 to 2% GDP used to rebuild Europe after World War II. A key area for investment would be technology. The US currently dominates the global tech scene, with firms such as Apple, Google and Amazon. Only 4 of the world's top 50 tech companies are European.
We want to aim at closing the innovation gap with the United States. Innovation is the first pillar of the report. Europe is nowadays stuck in a static industrial structure populated by mid-technology companies which are already mature. The problem is not that we lack smart people and we don't lack certainly good ideas, but there are too many barriers to commercializing innovations and scaling them up in the European Union.
So how far behind is Europe? Before the financial crisis of 2008, the EU's economy was slightly larger than the US's, at 16.2 trillion versus 14.7 trillion. Since then, the US economy has grown to 29 trillion, 1/3 larger than the EU and the UK combined at 21 trillion. China's economy leaped ahead of Europe, increasing in value by 3 trillion from 2020 to 2021 to reach 17.7 trillion. And this year, it's 18.5 trillion. Greater European defence spending is also high on the agenda for Draghi to free up the bloc from dependency on the US military and to replenish defence funds used in the Ukraine war. But given Europe's already slow economic growth, where will this money come from? And will European politicians and policymakers listen?
Well, let's meet our guests. In London, we have Lorenzo Codogno. He's visiting professor at LSE and formerly chief economist at the Italian Treasury. In Dubai, Jameel Ahmad. He is chief analyst at online trading brokerage GTC. And here with me in the studio, we have Vicky Pryce. She's chief economic advisor at the Centre for Economics and Business Research. You're all very welcome to Roundtable. Vicky, I'll come to you first. Mario Draghi, is he being over-dramatic here, or is Europe really falling behind quite badly and quite quickly?
I think Europe is falling behind, and I think something needs to give. We do have some countries which are doing quite well individually, but if you're going to be competing against the US and China, and this is increasingly the case, of course, now, particularly given the huge amounts of investment that is required to adapt to new technology and also deal with some of the issues that are out there, whether it's security or anything else, then you do need to get your act together. And getting your act together, as far as Draghi is concerned, means working a lot more closely together across Europe.
So you think from an economic perspective, he's absolutely right on this?
Oh, he absolutely is. If you just look just at the growth that we have seen in the US by comparison to the EU, for example, if you look at incomes, they've grown a lot less fast on average in the EU than they have in the US over the last 30 or so years. And certainly this has been the case, even more pronounced since the financial crisis, which is a real worry when you look ahead about the ability to respond to all those pressures that are out there. Security is one of the areas that Draghi emphasizes, which are very important. Well, we've seen what's going on right now. I mean, Europe is still dependent hugely on the US, and of course, with what's been going on in this relationship with Russia in particular, we found that Europe is struggling in terms of being able to make up, the structure that is actually required for it to do well in the future. So yes, I think he's absolutely right.
Lorenzo, are you in agreement that Draghi's projections and predictions about Europe are on the money?
I think so, yeah. I mean, if you want my personal feeling, it's I would be less, say, interventionist. In other words, there is clearly heavy intervention in the economy, according to the Draghi's report, and maybe more focus on the enabling reforms that could actually give a boost to the Eurozone economy. But having said that, let's say 95% of the report is fully in line with my thinking. As Vicky just said, Europe is falling behind, and that is pretty clear. And it's not just the energy crisis. It started long before that, and has not really changed. I think Europeans are more focused in their internal matters rather than becoming more competitive in a global scale. And unfortunately, the global economy has changed over the years. And now it's all about size, it's all about technology. And in these two areas, Europe is clearly behind.
Jameel, this figure that Draghi mentions of 800 billion euros per year, colossal amount of money. Where's that going to come from?
It's a lot of money, but I also want to follow up on what our guests have also said, and I agree with them. If you look at the competitiveness of the EU economy and even the data, it's like being stuck in the mud. EU GDP is pretty much range-bound, apart from some freak years around COVID. Last year, growth was only 0.4%. Between 2010 and 2020, growth was very range-bound too. And to some degree, the economy's never recovered, or the block, from the global financial crisis. We also have to take into account Draghi's previous role as well as the president of the European Central Bank. And even there, he was regularly pointing out that growth in Europe can not only come from interest rate policy, it also needs fiscal stimulus, which is investment. And that's also what he's pointing out in this report. And I think that overall, both guests are correct. And who knows where this money's going to come from, but definitely EU and the European Union is not as competitive as other parts of the world. As an analyst, I travel globally, and continental Europe, and even include the United Kingdom too, it is falling behind the pack.
And you're in Dubai, Jameel. Just in the Middle East, there's a lot of money swirling around. How do they view the European Union, European countries? Do they see them as on an equal with China and America, or very much a poor relation?
I'm not going to say a poor relation, but I think one thing that is respected is maybe the academic principles, but economically, clearly, it's not on the same level at all. Even the United Arab Emirates last year had the second largest IPOs for companies that were listed on the stock markets globally. And if you look at EU capital markets, they are so conservative, less than somewhere like 25% of the global equity market valuation of US peers. That's a huge depth. And that also shows why certain sectors, let's say hypothetically like technology or in the future artificial intelligence, why the European Union hasn't been able to catch those companies in the net, but they're more than happy to go towards Silicon Valley in the US or China.
Just on that point, Vicky, China, the United States, very ambitious countries, pushing ahead. How far behind do you think the European Union is now?
There's an interesting statistic in what Mario Draghi has pulled out when he did his report, which is that even if you went back to the productivity levels that the EU had pre-financial crisis, partly because of declining population, all you do by 2030 or possibly even 2050 is just stay still in terms of GDP when the others are growing. So there is a big issue about productivity around, innovation. And you can't just do it as an individual country. Many of the countries in Europe are quite small. Look at what is going on in Germany, the biggest one now, and the problems that it's facing, and think that they could just respond to the challenges that are out there and deliver, if you like, and try and compete with the US and China. It is impossible. So you have to pull together. I think that's the message he's saying. But in order to do that, what he's suggesting is that you need to be a lot more proactive so that government and businesses work a lot more closely together, that there is joint borrowing, which some countries have already been reacting against, so to support that growth across, that you almost force companies to merge, a bit like what happens in China, since you mentioned it earlier, so that you can have those European champions emerging, and that you do indeed sort of look at reskilling across the board. And again, that requires a huge amount of co-working. Not a lot of countries are quite in that mood right now. But I think what happens with the European Commission, what happens also in terms of decisions that are made about investment. He's suggesting lots of qualified majority voting in some of those areas, which until now had been either unanimously or had to be agreed like that, or were left to individual countries. So it requires a structure, a new structure for Europe as a result of that.
Do you think Europe is being held back then by all these different voices, different countries, different leaders and different opinions?
But what we need to remember, first of all, is how well Europe has done by actually having a single market and having a bigger number of people that you sell to, how it has incentivized, in fact, economies of scale and competition and so on. So we mustn't forget that this has been a big, big change that has taken place. But we are talking about loads of different countries, which some of them have huge strengths and some a bit less. It has allowed a lot of individual competitiveness to develop so that you have, centers of excellence across Europe. But if you are to then have a big whole, I mean, the capital markets one is a seriously important one. Where does the investment come from for those sectors? Perhaps if you have a combined pensions industry with loads of funds which is actually what he's suggesting, Draghi, that you can then invest, like it's being discussed right now in the UK, in startups and more innovation and so on, you could be much more effective in terms of the type of companies you attract here to begin with and how they can grow.
Lorenzo, I want to talk about energy. So Europe is paying 158% more for electricity than companies in the United States are paying, 345% more for natural gas. I mean, if Europe can fix its energy costs and sort that out, do you think that might make us more competitive?
Well, this is a part of a broader picture, I would say, in a sense that the energy is extremely important, certainly for some companies, for some sectors in the economy, but it's not the only ingredient. I mean, the focus of the Draghi's report is on innovation, on strengthening and nurturing skills, innovation, and so forth. But energy is part of the story. I mean, you cannot have a big, large continent as Europe with the cost of energy much higher than in the rest of the world. Clearly, some companies, some production will have to move away, and in some circumstances, these productions are perceived to be strategic for defense or for technological reasons. So I think it's part of the story. So it cannot be that Europe continues to pay more than 50% energy compared to the pre-2019 crisis. I think something has to change, meaning a lot of more investments in renewables or more diversification or more competition within Europe or more connections, because keep in mind that Europe is still not a well-connected market internally. So I think there is a lot of work here.
Jameel, what's the one major change you would like to see the European Union countries do to help themselves be more competitive and start catching up on the Americans and the Chinese?
I'm going to follow up on Vicky. Actually, it's the size and depth of the capital markets. EU markets, they're so conservative in comparison to the peers. So if you have more interest in investors investing in different parts of Europe, dependent on other sectors as well, then that's going to really help promote the appeal of investing in the European Union.
And just tell me, all the money swirling around the European Union, do you think Draghi should focus on the traditional economies that drive Europe, fixing France, fixing Germany, and giving less to the kind of regional economies, places at the periphery of Europe, if you like?
Well, that's the point, is that the EU member states have now grown to such an extent that obviously some of the more peripheral members do need funding in order to be on more of an equal par, at least in terms of reputation, as, let's say, the more core states. By core states, I'm using that term more loosely, towards traditional European Union members, whether that's France, Germany, Spain, or so forth. But each member state has its own potential weaknesses. And it's a very difficult conflict to defeat. And that's one of the reasons why European Central Bank policy, when it comes to setting the interest rates, when the European Central Bank wanted to hypothetically move interest rates towards the lower levels before the COVID and so forth, there was all these reports that Germany would defend this or would not be opposing this and so forth, but other states would have a different opinion. And that's why it's really difficult, because each state has its own personal view on what it would like to see.
Vicky, let's talk about Draghi himself and his track record. So 2011, he dragged Europe back from the brink. I should tell our viewers you're originally from Greece, so your country was at the heart of everything that was going on then. Give us your assessment on how successful he was then and, you know, how much attention people will pay to him now because of that track record.
Well, if you remember, he was the one who used the words, "You do everything to save the euro." And of course, what it did mean at the time is that he was struggling against a Germany, we're talking about being united, of course, which wasn't allowing QE to happen, quantitative easing to happen in Europe. And he hung around for a while until they did. But of course, by simply standing up and saying he'd do his best to save the euro, the rates in the capital markets at which Italy and Spain were borrowing fell quite significantly. So that was averted as a serious crisis. Of course, by that time, Greece was already in deep difficulty, and so were some of the other countries that had to be bailed out. But he did avert the biggest crisis. And of course, he lowered interest rates to negative. And it's really interesting when you think about what's happened with the European Central Bank, which is now cutting rates again. It was the last of the three main banks. So the UK, Bank of England raised rates first. Then you got the increase in the States a few months later, and then finally in the ECB in the summer of 2022. But they raised it from negative. It was still negative, which is where Draghi had put it, since 2014, basically. So it's really quite extraordinary when you think. So he has a good reputation on that, and he kept complaining that he was the only one who was doing anything for the economy in Europe, because, of course, the fiscal side was still very tight. Then, of course, he did become also head of, Prime Minister of Italy. So, he knows the politics as well. So his reputation is very, very strong. So just the fact that he has done this report, remember, this is not the first time there's been a competitiveness report. In Europe, we have had a number of competitiveness reports. So he's actually put together a lot of what has already been said, and lots of the recommendations were already there, hidden perhaps in some of the reports. But coming under him with a very strong voice, then perhaps we'll see some of that at least being done.
Lorenzo, is there enough urgency at the heart of Europe about this? I mean, the Chinese pushing on relentlessly, same with the Americans. In Europe, have we taken our eye off the ball?
Europeans are certainly late in this game, and they have been complacent for many years. But certainly the sense of urgency is growing by the day, I would say. And the fact that Draghi published this report on top of the letter report just before the new commission launches its program for the new legislature, I think is encouraging, because it means that the new commission can actually take it seriously and translate that into action. I think it's also very encouraging that certainly Draghi put his stamp on the report, but the report itself was produced by the staff of the Commission. So it is basically an in-house project which can only be translated now into action. And I think the new Commission is well positioned to translate that into action. And the support is now growing for doing something bold to relaunch the European economy.
Jameel, When we see headlines around Europe, there's a war in Ukraine, we see climate change stories, we see immigration stories, asylum seekers, conflict. But the whole issue of driving Europe's economy forward doesn't get a lot of attention, certainly not at the scale it should get. Do you feel that urgency is lacking somewhat?
Yeah, the EU's late to the party, I agree. And generally speaking, one of the issues, again, it's about the competitiveness, it's about the speed of getting things done. It's also about being at the heart of different innovations, no matter which sector that we could be talking about: transport, technology, future trends like artificial intelligence and so forth. It just, simply put, it's so hard to get things done. Whether we're looking at it from the perspective of the European Central Bank, whether we're looking at the perspective of getting different governments to agree to certain things. But you compare this to other regions of the world, and I travel to China a lot, things happen there at the speed of light once they have the agreement. And I think in the European Union, if you agree on something, you might be lucky if it happens next year. It's not going to happen next week. And the matter of the fact is that it's just too slow to get things done.
Vicky, come in on that. Too slow to get things done.
Well, it's interesting because just as Jameel was speaking, I was thinking about what happens on the regulatory front more generally, which I think is an important part of what Draghi, again, is talking about. There is definitely a concern that there are different regulations in different countries in all sorts of areas, and perhaps you can simplify things, and also the speed with which perhaps you take some of those decisions. But for the moment, it's pretty it's disconnected across. And he's calling for more regulatory impact assessments, more centrally done, more concern about competition and whether that's working properly. The interesting thing is that the UK had lent quite a lot of ideas on how to run the competition bit of the European Commission, because there wasn't even a chief economist running that bit of the Commission. So quite a lot of what we're doing over here has been translated across, which is good news. But yes, there are some aspects of things taking a long time. So there is a directive that comes out. It doesn't start actually being effective until I don't know when, perhaps a year later. And then by the time you start sort of checking whether it's being enforced properly, and then fines are imposed, then it takes forever because the firms are all taking them to court. And look what's going on right now with the tech sector. It does take a long time to get things done. There is no doubt about that. But on the other hand, it is a big region with loads of disparate bodies in there. And one way of getting around it is by, as Draghi, I think, is suggesting, changing the decision-making process in various areas where it really matters for the economy. It would be interesting to see whether that is followed up. But also, absolutely true, the Commission is there. The Commission has been taking on more powers recently and has become more assertive. And I think von der Leyen's second term probably will see a little bit more of that happening.
Lorenzo, will this report be filed away and forgotten, or will they implement it with some bit of haste and urgency?
That's a very good question. I think we have seen very good reports in the past and over a number of years. So your question is well taken, so to speak. The risk that it's taken as another big report, another big, say, technical assessment, but without any political follow-up, is there. Especially because the politics in Europe seems to be very fragmented right now, very divided and very weak. Look at what is happening in France. Look at the situation in Germany. So I think the risk is there. Having said that, as we discussed, the sense of urgency is also growing, and there is clearly evidence that Europe is falling behind, and without any strong action, it would be a disaster. So certainly there is a lot of push for action, and again, it is encouraging that this report comes from a man that is very highly respected throughout Europe, and that the Commission is at the beginning of its mandate, so it can actually attempt to start with new energy and new initiatives the new term.
Final question to you, Jameel. What will success look like?
Success will come through, I would say, improved economic momentum, seeing some sort of reinvigoration in the EU economy. even just on headline growth, that can be considered a success. But also with other metrics such as the unemployment rate, such as participation of different demographics, seeing some of the more peripheral members perhaps become more shining stars and success stories, rather than us looking at the core states and the issues that are happening in maybe, let's say, hypothetically, France or Germany and so forth. And generally speaking, just seeing the EU and the European Union being in positive headlines, rather than maybe the next crisis that might happen at any point, which I think is fair to say might even mean that this headline report is forgotten about over a week or so. You never know what's next.
Indeed. Jameel, Lorenzo and Vicky, thanks all so much for your insight. Remember, you can see more discussion and debate on our YouTube channel. Search for Roundtable TRT World. But for now, from me and Brady and all of the team here, goodbye and thank you for watching.